Ladies and gentlemen, the US market is now in a financial turmoil. We have got the US dollar crashing, you have got the US bond crashing, you have got the S&P fund and Nasdaq crashing. Everything seems to be very bad. In the midst of all this, the TLT, which has crashed to 83 over dollars, has a lone voice calling out, you will rise to $100. Let's take a look at what's happening right now and why their lone voice calling out, you'll go to 100. Let's see whether prediction is valid. Let's watch on, shall we? So today's title is Why the Financial Markets Fell, and is this a crisis or opportunity? And in the end, I'll give you the insight to why someone predicted that the TLT will rise to 100 from today's 83. Let's watch on, shall we? As usual, these are my disclaimers, not telling you to buy or sell. These are just for financial education and entertainment. Let's go on. So the US dollar right now has gone down all the way down to $1.29 versus the Singapore dollar, and it's quite significant. And the S&P 500 yesterday fell by 1.6%. And that's got nothing to do with Donald Trump coming out with a tariff war or things like that. Of course, he's responsible for it, but it's got nothing to do with tariff war for the first time. And the TLT has now crossed the barrier of $84. It's now $83.97 and potentially falling even more. Very severe, significant fall from the high of about $100 this year. So this is a developing news. Please hit subscribe for live stream alert because I'm watching this space very closely to see whether there are opportunity or crisis for me to react. And I'll alert everybody. Please hit subscribe and hit the alert bell. So on the political landscape right now, we have got the tariff war still going on. Yes, it came down quite a lot, but it's still high. Moody has downgraded the US government credit rating to AA plus instead of AAA, citing that fiscal policies are unsustainable. And Donald Trump just proposed a 3.3 trillion tax cut and spending plan that raised deficit concerns. So let's go on and take a look at what these details are. So the catalyst of all this really is Donald Trump's tax push that came out yesterday in a big way. Donald Trump has been pushing for a major tax cut bill, and the Republican, which he belongs to, the party, face tremendous challenge in getting a consensus in passing the bill. And the analysts estimate that if he get the bill passed, it will add about $3.8 trillion to US deficit over the next 10 years and is highly inequitable as a tax cut. The top 0.01% of the earners whose income is above $4.3 million will receive substantial benefit, about $400,000. Those that are earning less than $50,000 will experience financial losses. So this is something very unpopular by a lot of people, except the Republican and the rich. So the rich will get richer and the poor will get poorer. And in that sense, a lot of people are very concerned about this. But more importantly, someone must pay the bill. So if you are cutting the taxes, you simply means that you have now less government revenues. And meanwhile, your government expenditure is going up. So you'll spend a few $100 billion more a year, reaching to an incredible tax deficit. And therefore, we have got US budget deficit. They are going to go even higher. So there is borrowing increase and bond supply increase. And that's largely because Moody downgraded US credit rating from AAA to A1. So there is a very a difficult situation that the government of US is now in. So in order to have to fund the increase in deficit, the government must issue more bonds, right? When you have an increase in supply of more bonds, it leads to bond prices falling, and as a result, the yield will go up. So now investors have to be rewarded with higher yields, and that will depress the prices of existing bonds, and that explains why bond prices are going down. So the 10-year Treasury bonds yield has now reached 4.6%, and the 30-year yields have reached 5%. And the increased yield would certainly worsen the US debt as well, because the government has to borrow more money to pay even the interest. So yesterday there was a Treasury bonds auction, and the auction turned out very bad. There was a fallout. So the bid to cover ratio dropped dropped quite significantly, and now there is what we call investor fatigue. So nobody wants to buy the US bonds anymore. $16 billion auction of 20-year bonds drew weak demand. The yield increased to 5.127%. The investors right now want more compensation. Is very high since 2023. The yield on US Treasury is now has always been the benchmark for the risk-free rate. So a jump in this risk-free rate will lead to what we call a higher discount rate used in equity valuation. So this is a bit complicated, but it simply means that all the companies, the future earnings, okay, is now when value at today's dollar using this kind of rate, it will go down. So that's explained why also the equities also fall. So the lack of investor demand for bonds is caused by many reasons. There is a fiscal research because Trump proposed a multi-trillion dollar cut in the tax. This will add, 3.8 to $5 trillion to the debt over a decade. Moody downgraded the bonds from AAA to AA plus. And there is also a tariff war that's raging, increase in inflation. So all these lead to a bond sell-off. And there's also equity selling off in the concurrently as the yield continue to go up. And this increase in bonds, increase in equity sell-off cause more bond sell because there's a lot of hedge fund have margin calls on the equity side, and they cannot fund this enough. They sell the bonds to fund the equity. So all these are quite a big mess actually. And then right now, U.S. safe asset status of U.S. Treasury is now reconsidered, and global reserve managers in China, Japan, oil exporters, blah blah blah, central banks are now trying to diversify our USD assets. So US long-term bonds now have to go and give more yield in terms of percentage to attract more marginal buyers. The stock market has also a negative impact as the bond yields increase. So the discount rate for equities have risen, and that caused equity valuation to fall. And the Dow Jones fell by 1.9%, S&P fell by 1.6%, Nasdaq fell by 1.4%. And this is quite a severe impact on the stock market. There's spillover from bond market. This is quite rare. So on top of all the issues that we're facing, we now also have a fall in US dollar. So the US dollar is now declining significantly as people are now losing confidence in US assets. So they sell the US asset, they get US dollar, and they sell the US dollar to buy some other thing. And all this is actually very bad for the financial market. The US currency is no longer seen as the risk-free currency. And other options that you have a Swiss franc, euro, gold, even Bitcoin, is gaining some appeal for them to take flight too. So right now we have got real issues with trade as well. So all these are leading to a financial mess in the US market. In the midst of all this, one of my highly followed financial YouTuber, his name is Kevin. So in the channel called Meet Kevin, he says that the TLT will be over $100 by October this year, or he will dress up like a clown. Okay, and his point is that at the mess we are having right now, there's a high chance that there's will be a generational economic shock, likely due to the tariffs or employment issue that will lead to widespread layoffs, and as a result, the Federal Reserve will likely have to cut rate to zero or very low. And this would cause the entire bond market to have a, a fierce bull run. And I was shocked at looking at this kind of prediction. I think his reasoning is quite sound in the sense that this financial mess will cause economic mess as well, and that therefore the Federal Reserve will have to react. It is tempting to think like him. I will just say, I'm not telling you I will follow him. I'm not following him because it's quite dangerous. This is almost like a gamble. I will just say that it's very tempting to see predictions like this. What does it mean for all of us? Number one is our US holdings of treasuries and equities clearly have a fall, and there is a weakening of US dollars against the SGD, and that's not good as well. There's also a spillover effect on Singapore listed equities as well. and even our stock holdings in all our CPF investment scheme, all this will go down. So this is a developing news, and I just want to say that I'm watching over this space very closely as all this happen. I'm not sure this will cause a crash in a massive way. I'm not sure it will not as well because this currently is in a cloud of mess and smoke. But I think I do know that this is a developing news, so hit subscribe for my live stream alerts if it comes out. And I'm watching this space very closely. So let's watch on and see, whether this thing will unfold into a bigger mess or you wrap up with Trump doing something. Okay. So I'll keep you all informed real time, and let's see each other, possibly tonight or the following night. Okay. Bye bye.